You're listening to ABC News Radio.
Good afternoon. It's Monday, the 16th of May for 2022. And coming up...
I'm more than happy to take it. It's a small price to pay to set myself up for life, which is what I think getting into property does, especially if I can reinvest that money back into super.
Should people be able to use their superannuation to fund a house deposit? Well, the Prime Minister insists his party's latest housing policy will not push up house prices, despite one of his own ministers saying it would do so temporarily. If re-elected, the coalition will allow first home buyers to dip into their superannuation to put it towards a deposit for a house, capped at $50,000 from July next year. Labor opposes the scheme, and some economists have quickly warned it may increase house prices, with the superannuation minister conceding that that would likely happen in the short term. But Scott Morrison says any impact on house prices would be cancelled out by another policy encouraging older Australians to downsize their living arrangements.
Because of the balance of policies that we have, which means we're freeing up housing stock with our downsizing policy, and we've got a balanced arrangement for super, which means you can only access up to 40% and you have to put it back in the super, we think minimises any potential impact on house prices.
Is that so? Does that add up? Let's find out from Martin North, founder and principal of Digital Finance Analytics, who joins us now. Martin, good afternoon. What's your reaction to this plan?
I wasn't totally surprised. 3 years ago, of course, the Prime Minister in a pre-election announcement basically said prices will be higher. And of course, we have many programs over the last 3 years to see prices go higher. This is more of the same. Unfortunately, whilst it may sound good politically, I think both economically speaking and indeed interest of the long-term property sector, it probably doesn't make a lot of sense.
Some people are suggesting it'll just add further fuel to the housing price fire. What do you say?
Yes, unfortunately, all of these sorts of initiatives where you bring people forward into the market essentially lifts prices. And, if you put $50,000 into a deposit, that gives you leverage to borrow another $200,000. And that means that you can pay another $200,000 more for a property. So whilst you as an individual may be able to get in and get a property earlier, the net effect is higher prices. And in fact, you can directly trace higher prices over the last few years to the first home owner grant scheme and, by the way, low interest rates as well. Anything that actually tries to deal with this in a sort of tactical way, unfortunately ends up creating a bigger problem for later. And we've got very high house prices relative to income. It's a record. Housing affordability is at a record bad level at the moment. And unfortunately, these policies really don't get to the heart of the issue with regard to housing affordability. They simply, sound good as an election campaign, but strategically, they don't make much sense at all.
The Prime Minister insists any increase to the housing market would be marginal. He says that would be mitigated by their other policies, like encouraging those older homeowners to downsize and therefore increase supply of stock in the market. Would such an increase in stock help that much on the price front?
I'm not sure that it would. So, there were about 300,000 people helped to get into the market over the last couple of years. And, of course, house prices shot up more than 20%. So I'm not sure that you need a vast number. It's the marginal buyer that actually makes a difference. And on the other side, those people looking to downsize, certainly from a point of view of putting money into super, it may help. But the real barrier for getting out is actually having to buy another property and paying stamp duty again. So I'm not sure that other policy will necessarily do what a lot of people hope that it might. I mean, we have a big problem with property in Australia. It's way too expensive, but we don't really address the underlying issues, which is, in fact, we've got too much credit chasing the property sector. That means prices go ever higher. I think we need to come back and really stand back a little bit more strategically and say, how do we get back to more affordable housing? Because affordable housing doesn't mean bigger house prices. It needs to actually mean house prices coming back to be more realistic over the long term. Now, that's not a politically strong message for an election, but is actually strategically the right message for the economy and for society, I think.
Want to bring that balance between someone's income and how much they need to afford some of these house prices. So if you think these many government incentive programs have done very little to address that broader problem, what should happen? How do you do that?
Sorry, the dogs have got. They obviously don't like the policy. So the couple of points. I think that we need to understand that there is a real risk when it comes to very high income multiples and high levels of debt. So we need to have stronger controls in terms of the amount that can be borrowed. And I think also we need to look at the supply. It's not just the total number, but it's the type of properties. And there's a very important question about affordable housing and community-based housing, I think, to help too. But it really is a strategic question. But the real issue is supply of credit. And that, of course, is nobody wants to touch that because, of course, that drives profitability of the banks and drives momentum in the economy more broadly. But that's where I'd start to look.
Is that why people, including the woman we heard earlier, saying, listen, hey, it sounds good to me if I can get a hold of some of what is my own money to help pony up for the deposit, has a certain appeal? What about on that superannuation side of all of this? Is it wise to allow people to raid their superannuation fund in the short term? The industry Super Australia Group says that would torpedo super fund investment returns for all Australians.
Well, I think if we think about what superannuation was designed to be, it was meant to be a long-term savings scheme. You know, you get interest on interest over the years that you hold it, and eventually that provides you with support to you in old age. If, in fact, you raid that earlier, then potentially you may not get the benefit. The other point, of course, is pull money out. You're then locked into the property unless you actually, when you sell it, put the money back in. So, in fact, it might put a brake on you trading up later. So I think there are a whole bunch of downsides, and I'm not sure whether when you put the money back, you have to pay more tax on it. So there are lots of questions, but I think superannuation and the property sector should be connected very loosely. If you put more of your assets into property directly or indirectly, you're much more exposed to the property sector. And I would remind people that property prices don't always go up. They can go down. In Ireland and the US, they went down between 20 and 30%. And even in Australia, we're now suggesting that prices may fall. So maybe diversity and maybe seeing superannuation as a long-term wealth protection scheme is the way to go, rather than seeing it connected directly with the property sector.
So despite these jumps of about 70% in the last 10 years for property values here, you don't necessarily think they would be guaranteed to offer a better return on investment than any super fund might?
Well, I think the problem is that 70% is directly linked to the very low interest rates. We came down from quite high rates around the global financial crisis to very, very low rates now. And so it's availability of credit that's driven that. It's a one-time event. Now rates are going up, so I think it's highly unlikely that we're going to see the same performance again. And because of the over-leverage, the debt-to-income ratio is higher than it's ever been. The housing affordability is worse than it's ever been. And I think we've got to find a different path. We can't just go on assuming the same again. But mind you, most people, when you actually talk to them, as I do in my surveys, they still believe that property prices double every 5 to 7 years. That is not necessarily always true. It may be particular times when rates were cut, and it may be particular types of problems. But overall, performance in property is nowhere near as strong as many people think, plus the stamp duty, plus the cost to get out. So you need to put it in the round, I think.
There's a lot of costs around it, you're right. Martin, thanks very much. Martin North, founder and principal of Digital Finance Analytics, taking a closer look at that economic idea floated by the Liberal Party in the lead up to the election.